A couple episodes back, I broke down seller concessions from a basic standpoint, what they are, how they work, and how they show up in purchase contracts. And after publishing that episode, I wanted to look at how often seller concessions actually showed up on real transactions in 2025.
Welcome to Mortgage Made Simple, the podcast that cuts through the confusion of home loans and delivers exactly what you need to know. Fast, simple, and without the fluff.
So I went back and I reviewed 60 primary residence purchase transactions that I closed with buyers here in central Iowa in 2025. So not national data, not a market forecast, just actual closed deals that we're talking about today. And before getting into concessions again, I want to set some context around what these transactions looked like. So across these 60 purchases, the average loan amount was $227,000. Purchase prices ranged from roughly $125,000 to $700,000. So this wasn't limited to one price point or one type of buyer. All of these, though, were primary residence purchases here in central Iowa. And here's what showed up. Out of those 60 purchase transactions, 11 closed with zero contribution. So that means roughly 18% had no seller concessions, and just over 80% of them had some level of a contribution. So that's simply what closed. And that percentage doesn't tell you what should happen in every deal. It just tells you what did happen in deals that made it to the closing table. So looking at the transactions that included seller concessions, the average amount was just over $4,400. But when you average that across all 60 of those deals that I looked at, including the ones with zero, it came out to be about $3,600 per transaction. So the typical concession amount wasn't extreme. It was modest. It was consistent. It was repeatable. And what stood out when reviewing these files was where concessions were probably the most impactful. And in the majority of these transactions, buyers are already qualified on paper. So the income worked, credit worked, debt ratios worked. The variable, though, that concessions most often addressed was the cash that's required at closing. So in a higher rate environment like we're in right now, there's a lot more pressure that shows up at the closing table. Seller concessions really frequently reduce that pressure for buyers. They lowered out-of-pocket cost and they helped transactions reach the closing table without changing too drastically the overall structure of the deal. They didn't replace pricing strategy. They didn't override underwriting. They can help with that. They didn't change the fundamentals. They simply helped transactions execute. And from an offer structure standpoint, this is simply one variable that showed up repeatedly in successful contracts. So if you're evaluating how purchase deals are actually closing right now, this is the part that's worth paying attention to. Seller concession showed up in the majority of closed transactions across a wide range of price points. They weren't isolated to one scenario or one buyer profile. They were a common mechanism that was used to manage cash flow and move transactions to the closing table. So that doesn't mean, though, that every offer included concessions. It does mean that concessions were compatible with successful closings. So if you want a deeper breakdown of how seller concessions work mechanically, the earlier episode that I covered seller concessions goes over this. So this episode was just to look at how often they actually appeared in closed deals. And if you're a buyer or an agent who wants a clear, pressure-free way to understand how these pieces fit together, there's more resources at clearmortgageplan.com where I break this stuff down in plain, simple, clear language. So if this episode was helpful, make sure that you follow or you subscribe to wherever you're listening or watching today so that you don't miss future breakdowns based on real transactions. This is the second to last episode of the year. I'll have one more out before we roll into 2026. No crazy projections, no assumptions. We're just talking about what actually closed, and I'll catch you in the next episode. Thanks for listening to Mortgage Made Simple. We'll catch you later.